Welcome to this explainer. If you follow the Indian healthcare space, you already know diagnostics is a total battlefield right now. We're talking fierce competition, massive discount wars, and just relentless disruptors entering the market left and right. And yet, amidst all that chaos, one giant, Dr. LAL PATHLABS, continually dominates. So, how exactly do they stay on top? Let's check their financial pulse and find out. Today, we're unpacking their FY26 annual report and their standout Q1 FY27 results to give this company a really comprehensive health check. We're going to dig into the numbers, the overarching strategy, and those big structural tailwinds they're riding.
Here's our agenda for today. 1. FY26 Annual Performance Review. 2. Q1 FY27 June Results. 3. Operating Margins Analysis. 4. Navigating Intense Competition. And 5. Future Prospects and Outlook.
Section 1. FY26 Annual Performance Review, Evaluating the Vitals. Okay, let's start with the top line. The company reported a massive revenue from operations of over 27,629 million rupees. That marks a really solid 12.2% year-over-year growth. Now, in an industry facing serious downward price pressures and aggressive discounting from all those online aggregators, posting double-digit top-line growth is incredibly rare. It is a huge indicator of their brand trust and their vast operational footprint.
That's a steady, reliable climb from FY25, pulling in a profit after tax of nearly 5,100 million rupees. And you literally cannot generate these kinds of numbers without some serious infrastructure. They are operating a massive network of 312 labs and over 21,000 collection points. To put that in perspective, they served over 30 million patients and tested over 94 million samples in just a single year.
Geographically speaking, the North is an absolute fortress for them, raking in 63% of their sales. But they're not just resting on their laurels there. Their footprint is rapidly diversifying across the country. The East and West are now contributing 15% and 14% respectively. This geographical spread is totally critical for risk mitigation and capturing new markets, which has been fueled by strategic moves like their suburban diagnostics acquisition to really capture those lucrative Western markets.
Section 2. Q1 FY27 June Results. The Micro View. 19.1%. That is their year-over-year revenue growth for Q1, and honestly, it's phenomenal. This isn't just a good quarter, it's actually their highest quarterly revenue growth rate in 4 years. So the momentum isn't just continuing here, it's accelerating.
Breaking down the Q1 financials specifically, we see a profit before tax of 669 million rupees and a profit after tax of 510 million. Management actually notes that this is driven by strong underlying organic business strength. The real secret sauce, though? Tests per patient. It improved from 3.07 last year to 3.14 this quarter. What that means is patients aren't just visiting, they're opting for broader testing panels, which drives up the revenue per interaction without adding any extra acquisition costs. Pretty smart, right?
Moving on to Section 3. Operating Margins Analysis. Reinvesting for the Future.
Despite those intense industry price wars we keep talking about, their financial discipline is basically absolute. They held their EBITDA margin strong at 28.3% for FY26. But what's even more impressive is their debt-to-equity ratio. It sits at just 0.08. Think of it as a financial fortress. They are essentially operating debt-free, which gives them massive flexibility while their competitors are out there struggling with interest payments. Actually, their interest coverage ratio improved to 30.3 times, indicating profound financial health and overall liquidity. CEO Shankha Banerjee made the company's margin strategy crystal clear during their earnings call. He emphasized that they aren't just hoarding cash to make the balance sheet look pretty. The idea is always to reinvest for compounding growth. They carefully balance profitability with strategic reinvestments back into the business, prioritizing long-term, sustainable expansion rather than just trying to maximize short-term margin percentages. And just look at the result of that disciplined capital allocation, a 44% return on capital employed for FY26. That is stellar. It proves they are ruthlessly efficient at taking physical lab investments and turning them into actual bottom-line profit. That kind of discipline is a massive competitive advantage.
Section 4. Navigating Intense Competition, Threats and Diagnostics.
Look, the diagnostics space is practically under siege right now. Because the entry barriers are relatively moderate, it's invited a flood of aggressive online apps offering deep discounts, not to mention deep-pocketed pharma giants and hospital chains, all fighting tooth and nail for market share. You add in the numerous unorganized regional players, and this creates severe downward pressure on test pricing and just generally increases the overall market fragmentation.
So how exactly do they fight back against these headwinds? Well, they're riding a massive structural tailwind. Indians are experiencing a total paradigm shift toward preventative healthcare. In fact, their SWAST-fit preventative packages surged to 26% of consolidated revenue by late last year. Aging populations, rising income levels, and just overall increased healthcare awareness are driving steady volume growth that easily offsets the pricing pressure from budget competitors.
Which brings us to our final part, Section 5. Future Prospects and Outlook, the road ahead.
To escape the trap of just offering basic, commoditized blood tests, the company is leaning super heavily into technology to shape a precise, tech-enabled future for healthcare. They're building a future-ready portfolio of advanced, highly specialized diagnostics where clinical precision and not just the lowest price tag is the ultimate differentiator.
Going forward into FY27, their strategic focus is all about expanding their geographic access and network presence even further. They're advancing specialized diagnostics and even exploring calibrated international expansion, building on their existing presence in Nepal and Bangladesh. But honestly, the real headline? They are sitting on a liquid investment war chest of approximately 1,400 crore rupees. Management is actively hunting for M&A opportunities, ready to buy up struggling regional competitors or acquire new tech.
So, as we wrap up this explainer, the big question remains. In an industry literally defined by brutal price wars and heavily funded disruptors, will Dr. LAL PATHLABS' disciplined compounding outpace the aggressive competition? Well, considering their massive scale, zero debt, and disciplined reinvestment, they are heavily armed for the battles ahead. Thanks for joining me, and definitely keep a close watch on who they decide to acquire next.